Right, time check, it's almost 11 in the morning in Hong Kong, in Shanghai, and also in Singapore. Welcome to Bloomberg Markets Asia. I am David Ingles. Let's get to your top stories today. The Chinese currency sliding to its weakest level. This is the onshore rate, to be more specific. Lowest since November. Amid signs policymakers are allowing the currency to depreciate against this resilient U.S. dollar. Against that backdrop in the currency market, stocks are coming under pressure in the region here, trading weaker as the markets assess the sell-off that we're seeing in the bond markets. Now, stronger than expected May U.S. consumer confidence and also some hawkish remarks out of Neil Kashkari, out of the Fed here, adding to these receding expectations for rate reductions. Plus, aluminum recycler Novelis files for an IPO with plans to raise around $900 million. We speak to the MD of its parent company, Hindalco, about that specific fundraising plan. All right, welcome to the show, and we're just, of course, heading into the latter part of the morning session in most parts of the region. Of course, we have Indian markets coming online this hour, and just give us a flavor of what direction is probably looking like ahead of that open in India. Avril Hong is with us out of Singapore to just give us a pulse check, Avril, of how these markets are doing at this point. Avril.
Yeah, I think it's a negative pulse check. India stocks look to be opening on the back foot. I mean, it was a Wall Street session, don't forget, that was dominated by the selling in U.S. Treasuries, that yield on the 10-year really hitting that 4.55 level, losing further ground in the Asian session. And then we got the Australia CPI print, which kind of reminded everyone about how hard this last mile inflation fight is going to be. And we're really seeing those bonds in Australia also getting hit. ASX 200 declining even further. And this is on the day where markets are also, picking up on that property easing, spreading to yet more top tier cities in China. So you're seeing those material stocks along with industrials helping the CSI 300. But on the Hang Seng, it is in line with what we're seeing across the Asia Pacific. Now, that selling in U.S. Treasuries overnight came on the back of a soft U.S. auction, also against the backdrop of hawkish Fed speak. We're keeping an eye on currencies as well. So let's flip the board and take a closer look. As you just touched on, David, we saw onshore yuan hitting levels we haven't seen since November against the greenback. This is after that PBOC fix. Levels we haven't seen in 4 months. And that really shows perhaps that the PBOC is allowing potentially the currency to weaken. We're also keeping an eye on some of the other crosses. The Aussie now is recouping or losing some ground against the greenback, but we saw a bit of a jump earlier. Still gaining ground against the yen, and this is against the backdrop, of course, of the expectations of what the BOJ is going to do. I think the levels here, something we haven't seen since 2013. Of course, keeping an eye on pound versus yen as well. This is against the backdrop of that policy path, those expectations. What are central banks going to do? And of course, the Fed expectations. That is the big one we're watching. On that note, we heard from that known hawk, Neil Kashkari. He was true to form. Take a listen.
I've been asked many times, would we take potential interest rate increases off the table? I don't think anybody has formally taken them off the table. Even me, I say that we could sit here for as long as necessary until we get convinced that inflation is sustainably going back down to our 2% target. I'm not ruling out potential interest rate increases from here, but I think sitting where we are for an extended period of time is a more likely outcome. But of course, if we get surprised by the data, then we would do what we need to do.
Sounding hawkish there from the Fed official Neil Kashkari. David.
Yeah, to your point, Avril, true to form. Right. Now, we'll get to the developing news in a moment here. Just some thoughts really on this Fed pricing conversation, right? So I'm actually looking at my screens all across whether you're looking at swaps or Fed fund futures, all the way to 2025, 2024 is this year. There's a 0% probability attached to a rate hike. I'm not saying, of course, that's, we should be expecting as base case rate hikes, but zero? Question mark. Okay, some developing news in fact, this time last hour out of South Korea. The labor union at Samsung says it will go on strike for the first time in the company's history. Sam Kim joins us right now out of Seoul to get us up to speed on the story. Sam, what do we know so far?
Well, so far, it seems this union is one of several labor unions that Samsung has. But the problem with that is that this union claims the biggest membership, about a quarter of the entire workforce at Samsung. And that obviously includes some of the people that work in the chip division, which is the most important. Now, it doesn't not look like that, these workers are so serious that they would put things on hold in terms of production of semiconductors. But I think this is something that needs to be taken seriously given, the market reaction, especially with the Samsung shares dipping 1% after this union announced that it would go on a strike. What we're seeing from this union, and I was just reading up on the statement that they released before I was coming here to TV, was that they were not happy with the people that were put into the negotiations for the wage hike. They think that their own members were not taking part in the negotiations. And they're also unhappy with the way the wage increase was agreed on. Whereas companies like SK Hynix, the other rival chip maker, was using the operating profit as a way of sort of deducting the wage hike. Samsung was using a different standard, deducting a lot of the taxes from their operating profit. So there's a whole accounting issue that they're taking, bringing issue with. So this is something that is developing, and we'll need to look at the details going forward.
Yeah, and it's. I was about to say it's been a while, but it's really not been a while because this is the first time. So Sam, if we're learning about this now for the first time, I don't know, could you give us some background on labor unions and wage talks in South Korea? We really haven't seen a lot of news on this of late.
Yeah, sure. This is kind of a symbolic issue, so to speak, given that Samsung has been almost notorious for having cracked down on labor unions for a very long time. The chairman that was the father of the current, person that's running Samsung, Lee Gun-hee, who died in recent years, was someone that made sure that there would be no labor union at all at Samsung. He made it very specific that he would never, ever want to see any type of organized labor activities. After he died, things changed, and under his son, Samsung started to allow labor unions to form, and this is one of the things that have happened since then. So, there's more of a voice from the labor side going forward at Samsung. It sort of adds a wrinkle to the way the company runs and, how the operations are shaped. And we're seeing just a lot more of it now with the labor union. Labor laws in Korea tend to kind of side with the labor side. So, it'll be quite interesting how this kind of folds into the whole equation of how Samsung is run.
Sam, thank you so much for getting us up to speed and also that background. Sam Kim in Seoul for us. Let's bring in Belle, who's in Singapore for us. Of course, we forgot you. We almost forgot you, Belle, our co-pilot, as we were just approaching the runway about to take off. But let me bring you in. Let me bring you in to help steer the ship.
Thanks for finding me 7 minutes into the programming today.
Yeah.
Well, I mean, you were talking about markets there. We heard, of course, from Kashkari. And I think as well what's worth pointing out when it comes to Kashkari, he is the most notable hawk on the FOMC as well. So perhaps those comments around rate cuts or rate hikes, rather, still being on the table, you can put it in the context of that. But still, it's really the broader flavour that we've seen coming across markets, that impact of higher for longer Fed policy. So let's get more on that now. Bring in Joanna Chua. She's head of emerging market economics at Citigroup Global Markets, and she joins us today from Singapore, the sidelines of the Citi Macro Pan Asia Investor Conference. And Joanna, there's a lot of different ways to sort of slice and dice the impact of the Fed staying high for longer, but what are the ways that you're looking at it?
Right. No, sitting here in Asia, obviously the high for longer Fed is pretty much top of mind in a lot of investors. And it's particularly challenging for Asia because, as you know, most central banks in Asia, outside of a few, like Indonesia, India, and Philippines, everyone's policy rate is lower than the Fed. Of course, if you have BOJ on the other extreme with very, very negative rate differential with the Fed. So I think as market continues to reprice where they think Fed action is going to be in terms of cutting less, and then there's a huge debate about where the terminal Fed funds rate is going to be. We just had Larry Summers in our conference talking about the most likely, if you compare FOMC committee's kind of long-term terminal rate median forecast of 2.6, he thinks it's more likely going to be 4.6. That kind of tells you that the risk of the runway for Fed easing is a lot more limited. And that then raises question of how that's going to influence the trajectory of monetary policy across Asia. I think that is really a big concern, because you can make an argument across Asia. We don't have the same kind of inflation dynamics that we're seeing in the West. We don't have, obviously we still have some growth challenges, especially with what's happening in China and the spillovers of that in the region. And yet, to what extent is central bank policy going to be influenced or constrained by a high for longer Fed? I think that's been a big factor. And obviously, to the extent that that constraint, sometimes the differential of where we think the terminal rates are going to look like is manifesting itself in pressures on FX. So pressure of currency weakness relative to the dollar, protracted strong dollar environment is going to be a challenge for parts of the region.
Yeah, and which parts of the region in particular? Because I think you put it really perfectly there. Inflation has pretty much come into target for a lot of countries in this part of the world, but still they're so constrained by what the Fed does. Which areas or countries are most at risk in this sort of environment?
So right now in Asia, there's, with the exception across the mainstream economies in Asia, I think Indonesia or Bank Indonesia is showing some signs of particular explicit constraint in Fed policy, that they even hiked rates recently, even though there's really not much core inflationary pressures. And that's most explicit kind of a reaction or insurance hike on the back of the Fed policy. So I think across Asia, Indonesia has a little bit of vulnerability to the extent that the current account dynamics are deteriorating versus the rest of Asia, which most of them are kind of net external creditors or don't really have a lot of net external debt position. That creates risks of FX pressure leading to sort of financial stability constraints. I think Indonesia is a little bit more constrained, even though their policy rate is above the Fed. They're sensitive to FX volatility because they're still net external debtors. And so this rate differential puts pressure on capital outflow next repayments as the current account is deteriorating and we're not getting a lot of portfolio flow. So Indonesia's on the one extreme. And then obviously you can look across Asia who has kind of a bit of a cushion relative to the Fed that don't have the same balance sheet vulnerabilities. So you could say India, say Philippines, where policy rate is above the Fed. They're at 6.5%, both of them. Perceivably, they have a bit of space maybe to conduct a bit of more independent monetary policy, even though high for longer Fed is there. And I think, again, the question is in India's case, they don't really need to do anything at this juncture because growth is fine. And even in India, there might be a reassessment of where we think neutral rates are going to be or where RBI perceives neutral rates going to be. Philippines is interesting because then BSP had sounded, actually even on Bloomberg about a week and a half ago, starting to kind of throw a trial balloon of explicitly talking about its ability to ease monetary policy based on their own domestic financial conditions, domestic macroeconomic conditions. And you've seen an impact on the peso. So maybe there'll be some room there, but it's being tested because there's obviously an impact on FX. But you can make an argument that central bank, Philippines, is not as sensitive anymore to exchange rate pass-through risk on inflation than it was, say, a couple of years ago. But then in Asia, you have a bunch of low yielders, like in central banks where policy is below the Fed. And even though you can make an argument, countries like China or maybe Thailand, even Korea, arguably, given that inflation is at the target or below the target, or Korea is going to be approaching the target fairly soon, they should be, a little bit more comfortable about, having more independent monetary policy relative to the Fed and focus more on their kind of domestic conditions. So therefore, there could be room for cutting. And we certainly think China could cut, Thailand could cut, and yet they're not delivering. And in the case of Korea, even though macroeconomic domestic conditions can suggest that we think they could cut, I think this whole dollar environment and the volatility of FX is going to constrain policy of what BOK will do. So we still see room for cutting, but part of that is conditioned on we, Citi as a house, we're probably one of the only few now still expecting the Fed could cut as early as July. But I certainly think if that gets pushed back, given some of the hawkish speak we're getting out of the Fed and some of the mixed data we're going to get out of the U.S., that certainly also complicates easing outlook in a timetable for a number of central banks in Asia.
Yeah, Johanna, David here. When our producers mentioned that you were going to join the show, that was immediately what came to mind, that you guys still have, I think it's 4 cuts from July. But I think let's leave it with your U.S. colleagues. What I didn't hear you mention as far as economies was Taiwan and Malaysia. Is there a specific reason those were left out? Are they in a different part of the spectrum, Johanna?
Right. So obviously, in the case of Malaysia, Malaysia kind of stands out in Asia, where even in this whole kind of global rate hiking cycle after the pandemic and, post-pandemic and the war, I mean, Malaysia didn't really hike rates a lot. And when you think about inflation, although right now it's still very low, I mean, part of the reason why inflation is low in Malaysia is there's a lot of administered prices. And the expectation is they're going to go through subsidy reforms in order to meet the fiscal targets. And that's going to come this year with raw 95 fuel prices. So you have inflation heading higher. And so if you look at ex-ante real rates in Malaysia, it's quite low. So we don't really see them having much room to ease at this point. That was never really in the cards. And at the moment, we don't have them hiking as well, but we cannot preclude the possibility, especially if global growth ends up being resilient, that they could hike. And Taiwan obviously already hiked. At this point, we don't have them hiking further, but we still think risk reward is they could hike further because of the exceptional growth story that's come out of Taiwan and the fact that growth has been strong without even a capex story. And I think if capex picks up, there's certainly a risk, given the cycle in Taiwan, that there's a risk of further hikes there.
Well, Joanna, of course, you've always got those global outliers. That was Joanna Chua there from the Citigroup Global Markets Conference. And Dave, of course, that UBS Asian Investment Conference as well underway in Hong Kong.
Yeah, in fact, our next guest is the curator overseeing the week-long event. Joining us now, in fact, from the Four Seasons is Neil McLeod. He's head of APAC Product Management at UBS. Neil, good morning, and thanks for making the time. So I was there where you are yesterday. I was having a look at the agenda, and we're 2 days in. You're the curator, so we'll make you stick your neck out here. What was the standout so far, based on all the conversations and panels that you guys have had there?
Well, David, a good question. I think I'll upset a lot of people if I pick one session because we've had so much fantastic content. The Thai Prime Minister is speaking at the moment, and the room is packed, as you would expect. It's very rare to have a sitting leader speaking at an investment conference, so we've been very honoured to have him here today, and he's been giving us an extremely bullish outlook on the Thai economy, tourism coming back, FDI really booming, digital wallet coming later in the year. So that's been a big standout today. Yesterday, inevitably, one of the big debates is around monetary policy with Dr. Rajan and Olivier Blanchard. And clearly investors are still grappling with this issue of where interest rates go. So that was also something that's very, very popular. And John Kerry joining us, climate inevitably one of the biggest issues for us all. So there's been a lot of really interesting content.
Right. Neil, I'll try and speak up because I know it's loud just behind you right there. And you mentioned inflation remains a key worry for global investors in terms of asset allocation. And one thing, or one development that's actually trumped inflation as far as a key driver of returns has been AI. And I know you guys have been very deliberate in making sure that AI is part of the conversations there at UBS. Is that something that your clients asked you to do?
Look, over the last year, it's been the number one issue for everybody. I wouldn't say it's come out of nowhere, but when ChatGPT came along about 18 months ago, the interest levels have really exploded. And even though we know so much more about it in terms of the impact on companies today, I think the macroeconomic impact is still something that people are grappling with. Olivier Blanchard was talking about this yesterday. Paul Romer, who I'll be sitting down with just after this, is also grappling with this subject. You've got these very incredible minds, Nobel laureates, trying to figure out what does it mean. There's still enormous uncertainty about the productivity impact. But we also have a series of other panels looking at issues like security. I mean, a really critical issue for us when we think about what AI can do. So we have, I think, about 4 or 5 different panels around AI, the impact on the economy, the impact on companies, the impact on the markets, and of course, more importantly now, also we have to think about the impact on security. So a lot that clients are interested from this theme.
Neil, what's been the tone of the conversations around China in particular? Because we've seen that stock rally from February sort of stalling of sorts. Is there a sense that investors are seeing this as an opportunity to buy, or is this just about reassessing and really thinking perhaps there hasn't been enough fundamental changes coming through yet?
Well, Annabelle, it's a great question. The mood music coming out of a lot of the corporate meetings is quite positive. I wouldn't say people are pounding the table with unguarded optimism, but corporates are actually quite confident. On the consumer side, we've heard a lot of them talking about businesses being on plan, if not a little bit ahead of plan. The internet companies have been talking a pretty good story. So yes, the rally has been very, very strong, and perhaps it's taking a breather. But the meetings have been full. Clients are really trying to assess if there are fresh data points that can keep this going. And I would say that the mood music has been quite positive in China. Not a surprise given what the market's done, perhaps, but sometimes at these conferences, the corporates are a little bit more cautious than what the market's already been doing. But I'd say the general tone has been somewhat positive. People are not getting carried away. I would say the corporates aren't getting carried away, investors are not getting carried away, but there's definitely green shoots appearing on the consumer side, some of the industrial companies talking about orders picking back up. As I mentioned, the internet companies, capital return, rising margins, costs being controlled, higher returns in capital. I mean, these are the sorts of things that bull markets are built on. It's not just GDP growth. You want to see those higher returns, and there's a lot of stories that would support that coming out of this conference.
Neil, I think I hear your former hat talking there as an equity strategist, so let me push you a little bit more on that. And certainly the conversation around exposure to China is, I guess to your point, not so much unbridled optimism. Certainly optimism is warranted, but still caution, ditto. Is there a sense, though, from those meetings that we're ready to talk about China as beyond a tactical equity play at this point in time, or does that seem for a few months down the road still?
Well, David, I've been being somewhat cynical as a former strategist. Bull markets start reluctantly, and then they tend to carry on as the data gets better, the news gets better. We've had that first leg up, and our own UBS strategist moved overweight on China a couple of months ago, and that's been great so far. But I think to keep this going, you need to see more evidence of the economy getting a little bit better. That's certainly consistent with what we've heard. You need to have more confidence that the risks are coming down, which on the property side, my colleague John Lamb's been writing a lot about this and highlighting some of the policy measures from the government that are very supportive. Again, tick on that front. The corporates getting a little bit more optimistic. As I said, we've had some positive data points from one-on-one meetings as well. But there is, as you described it, David, there's always a little bit of reluctance to get carried away, particularly after 2 tough years for the market. But I would say that the fresh news coming out of this conference wouldn't disappoint somebody that was wanting to be more optimistic. Maybe that in itself is me being guarded about what we've seen, but I certainly think the data points have been encouraging that this Chinese move, or the China market move, can continue somewhat further.
Neil, thanks very much for your insights there. That was Neil McLeod, Head of APAC Product Management at UBS. And of course, as we mentioned, those property measures, for instance, one of the latest coming through from China, and just tracking how the gauge of broader Chinese developers have been performing in the session today. A little bit of upside here as we see China's mega cities loosening their home buying rules and more aid coming into the sector. But we'll have more details on that ahead. This is Bloomberg. Welcome back. Here are some of the top global stories that we're tracking. And the Israeli military says its tanks have reached the center of the southern Gaza city of Rafah as it conducts a limited and precise set of operations. Israeli Prime Minister Benjamin Netanyahu insists a ground invasion of Rafah is needed to root out thousands of Hamas fighters. The US, meanwhile, says Sunday's airstrike on a Rafah camp that reportedly killed 45 people will not mean a change of policy on supplying weapons to Israel. Hong Kong's National Security Police have arrested 6 people using a new security law for the first time. Among them is a former organiser of a now-banned annual vigil to commemorate the 1989 Tiananmen Square crackdown. Police say Cha Hung-tung made online posts with seditious intent, inciting people to join unlawful acts. She's currently in detention for a separate charge. Saudi Arabia's Crown Prince Mohammed bin Salman says his father, King Salman, has recovered from a recent illness. The Saudi government announced early this month that the 88-year-old monarch was being treated for fever and a lung infection. Questions over the king's health came as Iran was rocked by the death of its president and another top official in a helicopter crash.
Right, just on markets right now, we're struggling to find green spots, although maybe here in the form of some energy plays as well, on the back of some of the news that Belle just took you through. And certainly oil prices, just to make things very, very simple, oil prices have been an upward trajectory in the last 36 hours or so. Hence, we're at $80 on a most active contract on West Texas. Flip the boards, please. Also on the up, and maybe the crux of the pain point today was this meltdown we're seeing across the bond markets with the massive move up in yields in the U.S. and even more so, this yield play we're seeing in Australia. So the long end, so you have 10 and also 30-year yields are actually now on track for the biggest single-day move on absolute yields going back to about October of last year. Japanese 10-year yields right now 107 is where we are as far as that is concerned. Global macro movers, the tone across these markets has grown even more negative in the last 30 minutes or so. So session lows in the Asia Pacific. We talked about the bond markets there as well. So proper hump day, as they say. This is Bloomberg.
Welcome back. You're watching Bloomberg Markets Asia, and we are just about to go into the lunch break for Chinese mainland equities. And Avril, taking a look at some of the action, because actually when you take a look at trading volumes as well, they're fairly thin right now, but you're watching China in particular.
Yeah, as we saw how those big cities continue their property restriction easing after Shanghai. We heard from Shenzhen, Guangzhou. So that's raising optimism that, we're seeing this follow through after the central government unveiled $40 billion worth to kind of prop up the sector in terms of helping those local governments to take on those unsold homes, support for the real estate sector. So we're seeing CSI 300 in the green today on a day where it's really negative elsewhere. Even on the Hang Seng, tech's not doing that well, especially as we see those yields really rising. Keeping an eye on dollar offshore yuan, levels we haven't seen since November. Worth keeping in mind that from some of the strategists out of Mizuho, they think that for the PBOC, it's not so much about defending specific levels. It's about, kind of recalibrating the pace of depreciation of the Chinese currency. I want to talk you through what we're seeing among some of the expectations from economists for China. But before that, let's take a look at what we're seeing out of Japan. We're just back from the lunch break there as well. And we're seeing, I think today, insurance stocks, they're helping to cap the declines on the benchmarks amid these higher yields. Look at the 10 years moving ever closer to the 1.08 level. Keeping an eye as well, of course, on dollar yen as it still sits above 157. Okay, let's take a look at what we're seeing from economists. Those surveys via Bloomberg, we had some that say, we're going to get a boost for GDP just from this property rescue package out of Chinese authorities. But it's also worth noting that separate survey shows, despite the better economic outlook this year, the GDP revised upwards based on the forecast, that some of the other indicators, it was revised down. So it makes you get the sense that the government will have to do a bit more of that heavy lifting here. David.
Yeah, particularly as the retail sales numbers come down too, I noticed that, and investment really needs to pick up, I guess, to Avril's point there. And really along the same breath, if you think about it. So you have private economists, you have the IMF also just raising their own growth forecast for China. So the target now, or the projection now from the IMF is 5% expansion there instead of, we're coming off a 4.6% projection that they had earlier on. So that 5% basically puts the IMF in line with the growth target out of Beijing of around 5%. The first Deputy Managing Director, Geeta Gopinath, spoke exclusively with Bloomberg about why they actually upgraded that forecast.
We've upgraded China's growth by 0.4 percentage points for this year and for next. So we have growth now projected at 5% for this year and 4.6% for next year. There are two main drivers for that. The first is the better than expected first quarter GDP numbers that came out for 2024. That is lifting up our growth projection. And the second is we have incorporated some of the newer announcements that have been made on the policy front. So those are the two main reasons for the upgrade.
But some say 5% is actually out of reach for China. They say private sector sentiment is still weak. The property sector is also in the doldrums, 60 million homes still unsold, and some point to China Vanka under a lot of financial stress. At some point, Geeta, that is likely to weigh on confidence, weigh on sentiment, weigh on growth as well. What's your take on that?
So China's economy is continuing to recover. So we certainly are seeing that consumption is recovering, but still it has some ways to go. The strength we're seeing in public investment remains. Private investment is still weak, mainly because of the weakness in the property sector. So we are seeing signs of recovery, but yes, there is still more that we need to see more evidence of that. But I think despite that, we do expect that growth will be around 5% this year.
What more needs to be done?
So firstly, I would like to recognize the policy steps that have been taken. I mean, the recent announcement, which involves upgrading equipment of firms, but also consumer goods of households, that can help. But yes, in our view, more will be needed. And so specifically on the property sector front, I think what would be very helpful is to deal with the problem of pre-sold housing. So there are a large number of houses that have been pre-sold but have not been completed. Here, we see a bigger role for the central government to come in and to deal with that, to be able to complete those pre-sold houses. Because when that happens, that's going to help household confidence, which is really essential at this time, and also will help with the exit of non-viable developers. Secondly, in terms of providing support, while overall we think that there should be a fiscal neutral stance, I think it is important that the spending goes in the direction of helping low-income households, because they are the ones who are able to consume more of that additional income, and that will also provide a boost to the economy.
How are you assessing other risks? Some say that there's a risk of a new trade war. Of course, we heard from G7 finance ministers calling out China on its trade practices. We have the U.S. saying that it will reimpose those tariffs expiring, and we have China itself saying that it might impose 25% tariffs on imported autos from the U.S. as well as Europe. How might this play out? How might it impact China's economy as well as the economy of the world?
Yeah, I was just in Stresa for these G7 meetings, so I'm coming from there. And, you know, we're certainly living in times where there is questions being raised about the global trading system and the fairness of it. The IMF, as a general rule, we are strongly in favor of an open rule-based trading system, and therefore any disputes that countries have with each other, we believe, should be handled through the multilateral trading system, I mean, through the WTO. Now, there are concerns that are being raised. Industrial policies is something that comes up in conversations everywhere. Many countries deploy industrial policies. That has implications not just for their own resource allocation, but also potential spillovers to the rest of the world. And that is generating risks of greater fragmentation. But here's where we think it's critical for countries not to move unilaterally outside the multilateral trading system to address this, but to work with each other to strengthen the trading system, to come up with, you know, better rules of engagement when you have countries using subsidies, so that there's a common agreed principle on how to deal with these kinds of issues.
You talked about industrial policy overcapacity. That was one issue that was raised to us by Le Maire in an interview with Bloomberg. He says that perhaps cheap Chinese goods will be detrimental to the whole global economy. How are you assessing that?
So firstly, I think when we are looking at China, we should just step back and recognize the macro situation. So the fact that overall demand in China remains weak, we still have a negative output gap. predicted for China. So in an environment where there is weak demand, of course, that's going to generate imbalances, and that's where action needs to be taken. Keep setting aside the implications for the rest of the world. Just for China itself, being able to raise demand is going to be very helpful. Secondly, again, for all countries, including China, that are deploying industrial policies, you have to make sure you're doing this in a targeted, in a manner which is also temporary. Otherwise, you're going to end up with just misallocating resources within your own country. Again, setting aside the spillovers to the rest of the world. So for individual countries' perspective, it is important to make sure the resources get well allocated, and sometimes these industrial policies just distort signals, and you end up with a much less productive economy. So these are issues the countries need to pay close attention to.
That was the IMF's first Deputy Managing Director, Geeta Gopinath, speaking with Bloomberg's Haslinda Almin. And coming up, we'll hear from the metals producer Hindalco. Its Atlanta-based unit Novelis has filed for details of its upcoming US IPO. We're going to discuss those plans with Hindalco Industries MD Satish Pai, and we'll get more on the company's outlook as well. More ahead. This is Bloomberg. Just 5 minutes away now from the open for Indian equities today, and you're just seeing futures here guiding for a bit of a drop at the open, so sort of tracking as well the sentiment we've got across broader Asia today, given these expectations around the Fed staying higher for longer and how that's really going to be affecting EM central banks in turn. Of course, the Indian election's still underway, and we've actually had a bit of data coming out on that as well, because according to our survey at Bloomberg, we've got to see Modi's party winning more than 303 seats in the general election in order for Indian equities to extend their record rally, Dave.
Yeah, well, we'll see. I think that's really down to the future, as they say. One thing that is fairly certain is this deal, of course, that's about to take place, of course. So we're talking about Novelis. That's the American unit of Hindalco Industries. So we now know it's filed the details of that upcoming U.S. listing. I believe the roadshow is ongoing right now. It hopes to raise 900 million or close to 900 million US dollars here. So it values then the recycler of aluminum here around $12 billion here. For more context in the big picture, let's bring in Menaka Doshi here in Mumbai, our colleague, of course. Yeah, Menaka, take it away.
Hi, good morning, David. You did give the headline numbers out. Just to reiterate, we had this filing come in last night. This is about Novelis's IPO, which we've known about for a while, but didn't have all the details. Now we know that its owner, Hindalco, which is the Indian parent and listed company here in India, seeks to sell between 45 to 52 million shares. That's roughly about 7.5% of equity for just over $1 billion at the top end of a price range that's between $18 to $21 per share. And that puts the equity valuation of Novelis at just close to 13 billion. That's 12.74 billion to be precise. Now, this IPO is big news, but we'd also like to talk about the demand for aluminum and copper, both of which are key businesses for Hindalco. I'm joined this morning by the Managing Director, Satish Pai. Satish, good morning. Thank you for your time. I have to ask, what can you tell us about this IPO, why you're doing it, and what the use of funds will be?
So I think that, at the outset, I think you did a fantastic analysis of the IPO already. Unfortunately, because of the SEC regulations, as you said, we just started the roadshow. I will not be able to comment at all, but I think you did a fairly good summary right at the beginning first. So thank you for that.
Well, Satish, I understand that you are under restrictions to share details, but surely in the roadshows you'll be telling prospective investors about what you hope to do with the money collected, and what the prospects for the business are. So I'm sure you can share with us some idea of where those funds that you will raise through the IPO will be deployed. Will they be deployed towards your current capital expansion program? Are you looking at acquisitions? What's the plan?
I think you will get to know that as soon as we close the IPO.
All right. I could spend more time pushing you here, but I can see that, I'm not going to have much luck. I do want to talk a little bit about, where you see the demand situation for the broader business, that's both aluminum and copper. You ended the year with lower shipments on aluminum. What does that tell us for FY25?
No, I think that we ended the year quite strongly. I mean, I really believe that the demand for aluminum and copper, because of all the various sectors that we work in, the demand is extremely strong. So our Q4, which is the Q1 calendar year shipments, were at record levels. And I think that this year we are looking at a good supply-demand situation. I think especially on the supply side, there is not much new capacity coming in, whereas especially for copper, as you can see how the prices have run up, people are very worried whether the supply will keep up with the demand. So I believe that for the commodities, non-ferrous metals in particular, calendar year 24 and 25 are going to be very strong.
How much of this is contingent, Satish, on the ongoing recovery in China? And, how big a role does that play in potentially derailing that forecast?
So I think that, I have consistently said that what happens in China is probably, besides the US, the single biggest impact on aluminum, copper, and most commodities in general. So I think that the signs of what's happening in the Chinese economy, especially in the building and construction, because on the renewable energy and on the EVs, which drives non-ferrous demand of aluminum and copper, China has been a great story for us so far. But I think now that the stimulus is being given even to the building and construction side, which consumes roughly 35% of aluminum and a larger percentage of copper, I think that's probably what's going to drive commodity prices and demand going forward.
Would you like to put numbers to what kind of growth you expect in this year, which is FY25, both in terms of top line as well as, or broader demand growth in that sense?
So for us, I'll have to go a little bit geographically, but I think in India, we are expecting demand to be sort of 7 to 8% year on year for aluminum and copper. I think in China, to be particular, the demand is going to be around 4%. In the US, it's also going to be around 4%. Europe is, I think even if it's flat, we'll be quite happy with that, because the weakest link in the global economy chain continues to be Europe.
And will the bulk of the demand be automotive? Because beverage was not as strong as you had anticipated last year. So where do you see the strongest growth come from sectorally?
Yeah, let's go. I'll just give you a rundown sector by sector. So our biggest sector, which is 55 to 60%, is the beverage can. Beverage can last year at the beginning was weak due to destocking. But you can see that in Q4, Novelis had a record 951 KT of shipments. So the beverage can market globally has come back quite strong. The auto sector is also doing very well. Building and construction generally has started to pick up with US interest rates. People know that maybe the cuts are not going to happen at the pace that they were expecting, but they also know that the rates have probably peaked. So that is starting to globally reflect in housing and construction coming back. So I think that the building and construction sector should do better this year compared to last year. And then in aerospace, which is small but quite lucrative for us, the demand in the aerospace sector is absolutely very strong, and it's really a capacity constraint that we are facing over there.
All right. Satish, talking of new projects, you've already sort of allocated capital outlay towards your new alumina and copper refinery projects, as well as the battery foil projects. And on the raw material side, I understand that you've bid for 2 nickel and cobalt mines when it comes to the critical mineral exploration license bid that India put out in February this year. What are the updates that you can give us on the progress of both?
So I think that on our capital projects, we are going to be spending roughly $1 billion for the next 3 years in India. And as you put out, the top projects that we have are the alumina refinery, where we are going through the regulatory clearances right now, and we should start breaking ground by, let's say, September, October, after the monsoon period. We are also going to break ground on a copper recycling plant in Gujarat in India. We are going to be completing our 170 KT rolling plant in Odisha and first coil coming out by December of this year. And then, small but interesting, we are also going to be working on a battery foil, aluminium battery foil, and going to start our project on the copper foil, both related to the lithium-ion battery. And we are also working to try to start a big rolling plant in the Middle East. So quite a lot of organic capex planned for Hindalco in the next 3 years. As I said, should be north of $1 billion every year going forward now.
And on the critical minerals license bids?
Yeah, on the critical
minerals. Have you heard back from the government?
Yeah, we have got a copper exploration block that we are going to start the exploration program post-monsoons. And on the nickel cobalt, we are going to be bidding. We bid on a lithium mine, but we did not get it. But I'm quite encouraged because there is about 38 critical mineral blocks that are going to be put up by the government for nickel, cobalt, for copper. And I think that we are going to be active participants in this process. We have put together a technical team, and we're going to get into exploration because, let me be clear, most of these blocks will require quite a lot of exploration before they come onto production.
Just one final question, Satish. I understand the debt's not very high on the Hindalco books yet, though you have laid out your expansion plans. There is about almost just under $5 billion of debt on the Novelis books. Are you going to use these IPO proceeds to pay any of that off? Though I understand that the proceeds will accrue to the parent company, which is Hindalco.
What I can talk about is the balance sheet of Hindalco right now. I think, we are on a negative net debt situation because we have cash of about 12,000 crores and debt of about 8,000 crores. Sure. So I think that what we intend to do is we have made our capex plan to be based completely on the cash that we generate. So if you look at current LME levels of aluminium, we are going to generate enough cash on the Hindalco balance sheet on its own to fund all our organic capex. So that's our plan. Internal accruals for the organic capex plans that I just outlined.
So what are you telling investors in the roadshow, Satish? I've got to ask, because I know there is so much interest around this IPO, and you are being very tight-lipped this morning, even if it's only because of regulatory restrictions.
So, as you rightfully said, because of those regulatory restrictions, I'll have to keep my lips quite tight.
Okay. All right, we'll leave it there. Satish, thank you so much for joining us this morning. That's Satish Pai, the Managing Director of Hindalco, laying out not just the organic capital outlay plans for the course of this year, which are fairly ambitious here in India, but also what the demand outlook is for aluminium and copper across the world. Back to you guys.
All right, Manika, thanks very much for that interview there. And of course, Indian markets just about 6 minutes into trade so far, and the outlook is a little bit of negativity here. So we're seeing most of those moving to the downside so far. One of the stocks that's really standing out to us, though, is PayTM, because we're actually seeing that one jumping around 5% at this point. But there are reports from the Times of India saying that the Adani Group chairman is perhaps looking to take a stake in a PayTM operator, 197 Communications, and even indeed that Gautam Adani met the founder of that company and its CEO on Tuesday to finalize possibly the contours of a deal. But that's the reporting that we're getting through here. You can see 197, that's the company in question, is jumping around 5% at this point in time. Adani stocks, though, are fairly flat right now. Tata Steel, also another one to track in. We've got earnings coming up later today, but we'll have more ahead. This is Bloomberg. Some of the top corporate stories that we're tracking here today, and Toyota's proposal to re-elect Chairman Akio Toyoda to its board is coming under pressure from two leading proxy advisory firms. Institutional Shareholder Services is urging investors to vote against the founding family member, citing improper vehicle testing and regulatory violations. And Glass Lewis as well, they've also recommended a no vote. Chinese car maker BYD has unveiled a new hybrid powertrain that's able to travel more than 2,000 kilometres without recharging or refueling. The upgrade means some of the automaker's hybrids could cover the distance from New York to Miami or from Munich to Madrid on a single charge and a full tank. The first two vehicles with the upgrade will be mid-sized sedans, including the SEAL 0.6 or 06. And Dave, of course, you can see BYD is really jumping in the session today, and this really just puts that automaker EV company way apart from its peers.
Yeah, I mean, 2,000 kilometers without a single charge, certainly, Bill. It brings up to mind, really, when you look at market. I think that's the distance between Singapore to Hong Kong, roughly. Point of advice, when you fly back, I know it's customary to bring something for your team. Leave that pandan cake back. Not that it's good, but we've had too much of it recently. Plenty more ahead. This is Bloomberg.